Morning, 63 in Chicago with the morning grain comments. So U.S. Midwest weather continues to be dry and a little bit cooler than normal. This should be good for harvest progress. Overnight grain prices are a little bit lower. Could be seeing some profit-taking long liquidation after the recent rallies going into this weekend. Overnight, we saw one private crop estimate group in Iowa estimated the U.S. corn yield at 167. That's up from their number in September, but a little bit lower than USDA's 167.5. In beans, they estimated the yield at 46.9, again above their September number, but a little bit below the USDA's 47.1. We'll have another guesstimate by a private group later today. Their September corn yield was 168.8, and their bean yield was 47.0. When we looked at the export sales data yesterday, we noted that currently the USDA is estimating corn exports about the same as they were a year ago. The problem is that commitments right now are about 10.5 million metric tons versus 14.5 last year. They are looking for lower bean exports, maybe as much as 100 million bushels below last year. Our commitment right now is 20.6 million tons versus 28.8. The trade is still waiting to see more announcements of the export sales after the Chinese sign their agreement. Wheat exports are supposed to be a little bit better than a year ago, but our sales are 11.1 million tons versus 13.5. We saw our first official census soybean crush data for the month of August. Kind of scratched a few people's heads because the crush data suggests that the crush was 11 million bushels higher than the average guess, and soybean oil stocks implied that about 70, maybe 72 million pounds less. Doesn't really make a lot of sense that with that big of a crush, the soybean oil stocks would be lower. Fund yesterday, buyers of beans and meals, sellers of beans and meal, buyers of corn and wheat. They continue to be short beans and wheat, long corn, and we did see some reports yesterday that the hedge funds were seeing their worst performance this year since 2008. In the emerging markets, first annual outflow in 27 years. Investors pulled $540 billion from developing markets, lower commodity prices, slower China economy, political unknown in Brazil and Turkey, and Middle East unrest, and maybe to blame. We'll get some Stats Canada numbers later today. Should be showing a little bit higher production numbers than their last estimate. So we've got prices a little bit lower going into the weekend. Should be a good harvest weekend. We'll be watching U.S. unemployment data and how the money flows for the rest of the day. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.